Are you a first-time home buyer or someone that's currently in the market and you're wondering which types of properties should I avoid or which types of property should I stay away from completely? And as someone who's bought several properties and also have helped hundreds finance real estate over the years, there's several different property types that I would completely avoid and I would not buy myself. So in today's video, I'm going to walk you through which specific property types that I would not buy and which ones should you avoid so that ultimately you don't end up buying a house and have buyer's remorse years later, and also so that you don't spend money on a bad investment. Now let's get into it. So new homes that were built between 2020 and 2023, because remember, we had a global pandemic that happened during this time and we had a huge shortage of materials. We didn't even have toilet paper back then, so you can only imagine how that affected home builds, because there was many lumber, drywall, HVAC, appliances shortage. Also, many builders had to resort with using a lot of cheaper alternatives, and also we had a huge supply chain issues, very inconsistent up and down. Now this goes without saying, not all home builders are like this. Also, we had a huge labor shortage as well. We also had a lot more buyers in the market because rates were down in the 2%. So that created a faster build timeline because these builders were having to keep up with buyer demand. So that's what corporate America does best. They increase profit, they start cutting corners. So many of these houses had a lot of sloppy finishes just to get them to the close table. Also, many of these clients found issues years later on. So what you want to do if you do end up looking at a home that was built between this time period, always get your home inspection done. New doesn't always mean better. And also ask for the builder materials, ask for which builder it was, and do your own research. So when it comes to condo, they're normally the hardest to sell because they have a really high HOA fee. Also, there's a lot of financing restrictions when it comes to FHA, VA, conventional, USDA. They want to make sure that the building itself is approved and also the HOA. Also, if your HOA has a very low budget or the HOA is mismanaging the fees in the budget, then they do what's called a special assessment. And that means that there's no room in the budget for big repairs. So they, on top of the monthly HOA fee, they charge all of the clients that are in the building as well. Also, the overall value, historically, condos, if there's a market crash, they're the first to fall in value. Now this goes without saying, if you're in a major city where condos, all it is condos, then that's going to keep its value, versus if you're in a city with a mixed amount, normally condos are the first to fall. Then never buy the best home in a bad neighborhood, because the home value will not increase, because how the values are assessed is home values rise based off of the actual area. And they still get compared, the home is still going to get compared to older homes in the areas, older homes that are not upkeep. So your value has a cap based on the neighborhood that you buy in. Also, it's going to be harder to sell because location is everything, and also the buyer pool will be a lot smaller if you live in an undesirable area. So what you want to do is, whenever you're buying a home, be very picky on the location in the area itself. Be less picky on the home, because at the end of the day, you can knock the home down, you can do upgrades on the home, but you can't change the location. When it comes to manufactured homes, there's really two types. Number one, you have manufactured homes on leased land, and this is where you do not own the land underneath, and it's not considered actual real estate. The easiest way to determine if it's on leased land or not is if there's a lot rent. If there is lot rent, just know and understand that that lot rent will increase over time. You also can't get a traditional mortgage on these types of properties because it's not considered real estate, so you either have to get like a personal loan or a loan through that mobile home park itself. Now, if you do own the land underneath, then it is considered real estate. It's actually one of the least desirable types of real estate, and there's a lot of financing restrictions. You can do an FHA loan, VA loan, conventional loan on it, but it's a little bit harder. And also, again, it's the least desirable type of real estate. Then when it comes to buying land, it's really hard to get a loan because there's very few banks that offer land loans. And a lot of times, If they do, they want anywhere from 40 to 50%, and they have really strict requirements and guidelines. Also, but there's another program where you can buy land and build a home on it, and it will combine the land purchase plus the construction costs all into one single loan. And the requirements for this is, if it's conventional loan, 5% down, you could either do a VA loan on it for 0%, and you'll really need a good credit score, 700 plus, and you have 11 months to get the build done. And if you're buying a home with either a well or septic on it, make sure you do a lot of research on this up front. Don't rely on just the seller's word, and always do your own inspections on this. And the reason why this matters is because repairs later on, they can cost thousands of dollars. And also, some counties itself require certain certificates and certain tests to be done in order for it to get approved with the county. And the best way to get this done is, negotiate repairs and also understand the long-term cost and maintenance of what you're getting into. And if you're buying a home in a flood zone, just understand that the flood insurance is very expensive. It can cost anywhere from $2,000 to $10,000 per year, and it gets added to your monthly cost. Also, banks require this. Even if your home is 1 inch into the flood zone, they're still going to require that flood insurance. Also, sometimes it's harder to resell these types of properties because there's fewer buyers that want to buy a house in a flood zone. Also, fewer buyers because insurance premiums increase a lot, especially with flood insurance. A lot of people just want to stay away. So a smart buyer move, do this up front. Check FEMA maps to see if it's in a flood zone before you even go under contract. You can also get flood quotes up front so that you know exactly how much it's going to cost and if it's really a risk that you're willing to take. And buying a house as is can financially wreck you if you do not do your own home inspection, because most homes are listed as is on the MLS. And as is just means that the seller up front is not going to be doing any repairs. But you can always do your own home inspection, and you want to do this to make sure you have peace of mind at the end of the day. And the reason why this matters is because you don't want to have any surprises pop up. Also, doing a home inspection gives you leverage, because even though if a seller says, I'm not going to do any repairs, it doesn't mean that you still cannot ask. Because if any major issues come up, you can renegotiate or walk away, and you can use the home inspection as leverage itself to tell them, hey, I'm not saying this myself, this is what a licensed home inspector is. And many times they either fix it, they either give you money off of your closing costs in order for you to fix it after, or they end up having a contractor fix it before closing. And most sellers will fix these issues. So if you're planning to buy a house in 2026 and want my help, click on the link in the description, schedule a call, and I'll be in touch.